Hello, welcome to the European Open briefing for Tuesday, August 8th. I'm Rafi Boyadjian, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So we're seeing the US dollar continuing to drift downwards. On Friday, there was a strong bounce after the stronger than expected non-farm payrolls report for July, but the dollar hasn't managed to maintain that momentum, although it is still, it's not too far from those highs. This week we have inflation data out of the US. We've got producer prices on Thursday and CPI on Friday, so those will be watched for further direction for dollar traders. We had Chinese trade data early today. They rose by less than expected, but despite that, both the Aussie and the yuan are up on the day. The Kiwi, on the other hand, is trading near 3-week lows ahead of the RBNZ meeting on Thursday, while the pound, although it has stabilized against the US dollar after Friday's fall, the euro is continuing to set new highs against sterling on the diverging monetary policy path between the Eurozone and the UK. And in commodities, oil it has bounced back from yesterday's lows. Investors are pretty much waiting for the outcome of the two-day OPEC meeting in Abu Dhabi. Let's start though with the dollar. We can see here that a big jump upwards after Friday's jobs numbers, which beat expectations. The dollar yen is currently trading at 110.60, while the dollar index it is well above those more than 1 year lows. It's last week. It's currently at 93.32. Despite the strong job numbers, though, the odds for another rate hike, as implied by the Fed funds futures, they stand below 50%. Although if we do see further strong data after the US, we could see those odds climbing back above 50%. We had a Fed speaker, a couple of Fed speakers actually. Neil Kashkari, the Minneapolis Fed president, he didn't really comment, he didn't really add anything new on monetary policy, but James Bullard, who's known to be a strong dove, although he is a non-voting member, he did say that if we do see further decline in unemployment, it shouldn't have too much of an upward effect on inflation, which is in contrast to what other FOMC members believe. They're with the view that further unemployment falls will likely lead to a rise in inflation. So we can see that the US dollar is pretty much lacking direction at the moment. Moving on to the Australian dollar and the Chinese yuan, we can see the Aussie. It had risen after we had the NAB business confidence numbers out of Australia. The confidence index rose from 14 to 15 in July, to the highest since 2008. The business conditions index was also up from 8 to 12. That's the highest since before the financial crisis, although it did drop back afterwards following the Chinese trade data. We saw Chinese exports rise by 7.2% year on year, versus expectations of 10.9% and down from 11.3% in June. Imports were up 11%, but that was below expectations of 16.6%. Despite that, the Aussie is, well, I guess although there was some disappointment, they're not too significant just yet, given the strong gains we've seen in Chinese both exports and imports so far this year. And also the yuan was supported yesterday from foreign exchange reserve data showing that China's foreign exchange reserves rose to the highest in 9 months in July. So that means that the Chinese central bank is no longer struggling to support the yuan in the currency markets. That's why we saw the yuan make strong gains. It hit a 10-month high of 6.6960 per US dollar. The first time in 10 months, USD CNY dropped below 6.70 level, and that led to a stronger midpoint being fixed by the People's Bank of China this morning. Moving on to the New Zealand dollar, it's a different story here because the Kiwi is struggling has been struggling since that weaker than expected inflation data in July for the second quarter. Yesterday it hit as low as 0.7346. We've got the Reserve Bank of New Zealand policy meeting on Thursday. They're expected to hold rates at 1.75%. Given the weak inflation reading, and we also had data showing that inflation expectations have also declined, so we could see a more cautious response on inflation by the RBNZ on Thursday. And following what we saw with the RBA, with their policy meeting early this month, the RBNZ may also warn against further appreciation of the Kiwi, given that both currencies have recently peaked at 2-year highs. Looking at the pound now, we can see that the pound did fall on Friday after the US dollar jumped on the jobs report, but it has found good support at the 1.30 level. But if you look at the euro pound, we can see the euro has been steadily climbing upwards. It did reach a 10-month high of 0.9060 earlier today. That fresh weakness comes after the Bank of England last week revised down its both growth and inflation forecast for the next 2 years, and there was the number of MPC members voting for a rate hike fell from 3 to 2, so this has vastly reduced the odds of a rate hike by the Bank of England later this year. So that's why we're seeing the euro do rather well, continuing to rise against sterling. But against the dollar, though, it's worth mentioning that the pound is looking less sensitive to Brexit-related news, although we do have a number of headlines coming out relating to the Brexit negotiations. We haven't seen anything new or substantial emerge out of those talks just yet, so that's why we're seeing less reaction in the forex markets to the Brexit headlines. And quick look at oil prices. We do have a 2-day meeting in Abu Dhabi, which began yesterday between OPEC members to discuss stricter compliance to the output deal, given that some members have not been as compliant as others. But for now, the focus, well, yesterday we did see a drop in oil prices after production resumed in Libya's largest oil field, following some disruption due to some armed protests there. Plus, we've got inventory numbers this week. So up until we hear more about the OPEC meeting and the US oil inventory numbers, we can see oil prices are trading pretty much in a range in the past few days. Looking at today's economic calendar, it was a busy day so far. We had the Chinese data, we had British retail sales from the British Retail Consortium, which rose slightly more than expected in July. We had the NAB Business Conditions Index figures out of Australia, and German trade figures. German trade numbers were a bit disappointing, but it's going to be much quieter in the US session with just JOLTS job openings. That's it from me. Thank you very much for watching and have a great day.